Hi guys, welcome back to Bull Trades with Anam. I understand a lot of us are have recently opened our FHSA and TFSA accounts and are looking at options to buy into, and I think this is one of the companies which can be definitely looked at. This is Autodesk, and we'll be quickly looking into its fundamentals as well as financials and technical analysis to make sure we understand where we are in terms of investing in this particular company. Quickly talking about the company, the price to earning ratio is 57.71%, and I think it's fair with this category of company with so many products and platforms. It is a software. It sells as a software as a service, and they've got a bunch of different products which they sell to customers across the globe. I'm quickly going to go to the company's website to be able to see which industries they cater to. So here we can see architecture, engineering, and construction. So they've got a bunch of different platforms, products for product design and manufacturing. They cater to media and entertainment. They definitely have a good bunch of platforms for workflows, for managing workflows as well. And they've got operating systems. Their platform works on both the systems, Windows as well as Mac. And they've been trying to expand, and which is clearly understood in their I'm just quickly reading their quarter 3 call transcript. So from what I understand, they had somewhat of a shortfall in business in the UK, but their accelerated growth, or the business they got out of Canada, was 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 pretty much balancing the degrowth in the United Kingdom region. And thereafter they're also looking at expansion, and they're working on getting their products sold via partners in Australia as well. So we can clearly understand that they are testing a new transaction model in Australia, as I just mentioned. So talking about the regions they cater to. So the majority products are sold in Americas, followed by Europe, Middle East, as well as Africa. So this is the year-on-year growth which they have shown in their quarterly presentation, and they've got a negative growth in APAC, and these are the products which are most selling. So the AEC is their most selling, and followed by the others. So we're not getting too technical about it, because again, it's not my forte, but this is what we understand so far. um, Talking about few key stats. So one of the most impressive things is that the company has a really good return on the capital, or on the total capital which is employed, which is 20.5%. What does return on capital employed mean, which is called ROCE in shorter terms? It means, let's say if the company invests $100 in any business, so the profits or the money they make is 20% out of it, or $20, which is fairly good from at this point of time. And we can also see a lot of the shareholding pattern in this particular company is that we've got strong hands, mutual fund holders as well as other major institutions contributing to 9.52% of they own the majority of the company. So again, they are always looking at making sure that the company does well, that they are getting good returns out of their investment. And 7.3% is individual stakeholders, and remaining is open to public or retailers like us. And quickly talking about the chart pattern, so we've seen the fundamentals as well as the financials. We will also, before we've not looked at the financials, sorry. So we'll quickly look at the financials of this company. Going through the income statement, which is profit and loss statement, you can see that the total revenue has been increasing every quarter. It's been going really well. Annually also, you can see double digit growth right from 2018 onwards. And we did have somewhat of a sort of a degrowth maybe in 2020 and 21, but again, it's a double digit growth nevertheless. And Talking about trailing 12 months as well, this is the highest ever amongst all the years from 2016 to till date. And talking about net income, again, this is going to be the highest ever. It may appear that 2020 has net income of 1.21 billion dollars, which is a little odd, but considering the total revenue is pretty much in line with all the other years. But as you go in details, this is just tax deferred, which has been added. It's just something which is added into the books. Maybe you can just read about it, and that's what is showing up. If you minus this, I think it's again coming in 400s, and which is completely in line and showing growth. So it's gone from 200 million dollars to 400 million dollars, now 800 million dollars, and now trailing 12 months is 917 million dollars, which is the highest ever in throughout all the quarters or all the years that we've seen. Balance sheet looks okay, it looks decent. The it has not it has been increasing quarterly, on a quarterly basis. So balance sheet is kind of getting stronger, and they do have some debt on their balance sheet, but I think that's pretty much manageable considering the growth that the company is showing. And it should be manageable in the years. But they've been able to, with the deferred tax we just spoke about, and the money they were able to cash out, they've decreased their net debt, and that shows in the balance sheet. Now we will go quickly to the I think we can quickly go to the technical analysis. Now, considering the prices are the revenue and the trailing 12 months net profit has been the highest ever, which was so I think the prices should definitely catch up to the highest ever price that this stock has ever achieved. And we can clearly see the price was 344, and the price of the stock at this point of time is very low. It's not been It really needs some catching up to do, and considering it's approaching its highest ever net profit, highest ever revenue, there is a clear margin of 41% which can be achieved right now. And talking about another chart pattern which is information, or which has shown us a breakout, it's a triangle pattern, which we can see from here. I think we can just um, we can check it over weekly chart pattern so that it is much more visible and easily seen for and it makes everything a little easier. So let's just quickly draw a triangle from here, and this is we can see that the triangle, the entire there is a small breakout that we can see from here. And the target, which in a short term on a short term basis, which we can see from here, is this, which is 41.92%, or 69.21% correctly speaking. So again, if you plot this from the point of breakout, we have 31% gain. But from the current price, on a very short term basis, this is the price target, which is from from current price, it is 18.5%, which I do not think should take more than maybe 1 quarter to be able to achieve this number. In definitely, I think another 7 or 8 months, we should be able to achieve 41%, considering the company continues to grow at the pace it has been growing. And why do I say that quarter 4, or the last quarter, which the company will be releasing in January, the results for which, and they did mention it in their outlook. So again, you can see the revenue, expected revenue, or the outlook roughly is going to be 1422 million dollars. So which is in line with what we can expect. So sorry, 1.4 billion dollars, and this shows 1.42. So again, with the total we can see over here, it is going to add up to around 900 million dollars. So in all, this is what our target looks like. On a short term basis, we can look for 288 as a target. On a long term basis, our target could be 44, it may definitely happen that the company that it will take some breaks as it moves from here, from this point of time to this point of time. So there could be certain dips or some pullback or consolidations before it finally reaches the top of this particular target. So but in my opinion, it should not take more than 10 to 12 months at max. 12 months is at max, considering the whole growth prospects of this company and how it's been doing so far, and considering their expansion model in other regions and areas. I think it should be definitely a good bet. But yeah, again, this is not a recommendation, and you are advised to definitely do all your due diligence and only then proceed with the purchase of this particular stock or any stock. Do not go beyond 3 or 5% allocation to any of the stocks, even if you like it way too much. That's not recommended. Just this, this is a well in this way you will be having a well diversified portfolio of 20 to 33 stocks, which is ideal and good. So anyway, until next time, we will be talking another about another stock. So until next time, bye.